there, this is Ten. Today we'll be talking about how I feel the stock market will react in October of 2021. Given that the stock market had a rough September, most investors are hopeful the stock market will rebound from this fall and continue to rise. However, some analysts fear the stock market will continue to go down in October. So in this video, we'll be talking about how I feel the stock market will react in October of 2021. Before you continue, please smash that button, and if you have to see more such videos, please subscribe to this channel. Firstly, we're talking about the main reason why some investors feel the stock market will move higher after slight correction in September. Due to the rapid development of the COVID-19 vaccines in many developed countries, fewer people are dying from the virus. Furthermore, there are fewer cases involving patients with a major complication with COVID-19. Due to the production, some governments started to reopen their economies while living with the virus. Rather than eradicating the virus, some governments started to allow the citizens to live with it. This is done by reaching a high inoculation rate. These governments are treating COVID-19 as another seasonal flu season. Hence, there is no need to fully eradicate the virus. Secondly, we're talking about the reasons why most investors feel the stock market will move lower even after correction in September. One of the reasons that caused the stock market to come down is due to the rising in natural gas. Natural gas prices are rising and could be more expensive in 13 years this winter. Natural gas is plentiful in the US and has been cheap for years, so the jump in natural gas this year is eye-popping. It has also lifted the shares of companies that specialize in natural gas production, like EQT, Waste Resources, Carbon Oil, and Gas and Electoral Resources. Besides electricity and heating demand, natural gas is an important feedstock and is used in the production of chemicals, fertilizers, paper and glass, amongst other products. So why is there a rise in natural gas? Natural gas price has been caught in the perfect storm of lower supplies and rising demand. Price raised higher, first as unprecedented heat stroke air conditioning demands across the US, particularly in the northwest. As a result, less gas was put into storage for the winter months during the key summer injection period. Add to that a colder than normal winter weather and price could jump more. Anything close to or colder than a full standard deviation from the average will likely trigger a price spike to cause demand destruction with gas above $10. Goldman Sachs analysts note gas prices were last that high in 2008. The upward pressure on gas price is global, and since the US is an exporter, prices in North America are now more influenced by price in other markets. Now, the US industry is also suffering from low production due to Hurricane Idalia, with 77.3% of Gulf of Mexico production still shut. According to the Energy Information Administration, the level of gas in US storage is 7.4% below the 5-year average and 16.8% below the level last year at this time. The dynamic of rising demand and low inventories have been attracting investors into the shares of natural gas producers as well as United States Natural Gas Fund (ETF). Natural gas prices are flaring as Biden administration is preparing for higher dependence on renewable energy in the electricity market. Furthermore, Jim Cramer from CNBC said that the chart suggests that natural gas prices surge isn't finished yet. The chart, as interpreted by Kelly Cramer, suggests that natural gas could continue to explode higher for a little while, but ultimately she thinks this is the same kind of temporary short squeeze rally that we have seen in so many other communities. To make money, Ho said, an unusual hot summer plus disruptions associated with weather disasters such as Hurricane Ida play a role in kickstarting the jump in natural gas prices, Kramer said. However, unless we get an extremely cold winter, Kana thinks that market is overestimating the level of demand here with net gas at $5 and change. Freeman pointed to a chart from Kana that shows data from the Commodity Futures Trading Commission commitment of trading reports for natural gas futures, which contains net position of small speculators, professional money managers, and commercial hedge funds. However, Kramer said, despite her view that the squeeze will eventually subside, Kramer did not think it is out of juice just yet. A key reason is that the large speculators have not become neutral or net long yet based on the latest CFTC data, Kramer said. That is what it took for past short squeeze to wind down, Kramer said. Moreover, natural gas price RSI reached 80, a level that have signaled near-term tops throughout much of this year. On its weekly chart, it also got above 80, and that is the second higher and the second most overbought it has been in a decade, Maley said. This doesn't mean that the bull market is over for this community. I just think that when you get a weekly chart that is that overbought, the pullback is going to last for more than a couple of days. And the current pullback, I think, won't be the end of it, he said. We are going to have to see a pullback that lasts for more than a few days. I think we are due for a pullback, but long term, this is a relatively clean solution to the energy, and I think we are going to continue to see strength in natural gas over the coming years from a fundamental standpoint, she said. However, the run has come to an end for now after natural gas dropped 7% on supply concerns. Natural gas futures dipped as much as 8%, pulling back from a more than 7 years high above $6 per million British terminal units hit during the price season. Natural gas prices have shot up this month amidst an energy crunch in Europe that sends power prices to all-time high. Despite the downturn, some believe it's a temporary halt in an otherwise upward trajectory. Natural gas fundamentals all point to higher prices, robust Chinese demand, shut-in offshore US production, and low supplies from Russia, strategists at Onda said. The natural gas market have a supply power and does not look like that will change anytime soon. The second reason that my call stock market is that there's a slight chance that there will not be any infrastructure bill. President Joe Biden spends time talking to key senators and Democratic leaders in Congress, trying to break an intra-party stalemate that threatens his entire domestic agenda. But shortly before midnight, it was clear that neither Biden nor Democratic leaders in Congress have managed to broker a deal yet between a group of progressive House members and two moderate Democrats in Senate, each of whom is refusing to vote in favor of the other's priorities until their own goals are met first. A great deal of progress has been made this week, and we are closer to an agreement than ever, White House Press Secretary Jen Psaki said in a statement. The $500 billion infrastructure and job package is a pillar of Biden's domestic agenda and fulfills the bedrock campaign promise he made. Pelosi and Biden have been trying to win support for an infrastructure bill amongst progressives who said they will not vote for it unless the House is also ready to pass a sweeping budget reconciliation bill to expand the social safety net and climate policies. But fundamental parts of that bill are still being debated in the Senate. House progressives are worried that if they vote to pass an infrastructure bill championed by moderates, they will lose any leverage they have in pushing these same moderates to back a transformation budget bill later on. Moreover, President Biden decided to sign a temporary fundamental bill to prevent a government shutdown. Congress avoided a government shutdown hours before funding would have lapsed. President Biden signed a short-term appropriation bill that will keep the government running through December 3rd. Washington had to beat a deadline to prevent a shutdown of some federal operations. In a statement after he signed the measures, Biden said it meets critical and urgent needs of the nation. He added that there is so much more to do. The House passed the bill by a 254 to 175 margin. Every Democratic representative and 34 Republicans supported it. The so-called continuing resolution will set spending at current levels into December while lawmakers hash out a full-year funding plan. The legislation includes money for hurricane relief and resettlement of Afghan refugees. A government shutdown could have led to a furlough of federal workers and suspension of certain service. A funding lapse could have forced particular challenge during U.S. efforts to fight the pandemic, though the Biden administration has said a shutdown will have little effects on public health functions. The third reason that caused the stock market to drop is the rise in energy companies. Due to the rise in crude oil, most investors believe that growth stocks could not be touched, as growth stocks usually benefit when there are low interest rates and inflation. Most investors will not want to buy any growth stocks. Moreover, high dividend-paying companies have not fully recovered from the pandemic. The only sector that could benefit from rising inflation is the energy companies. However, this is greatly affected and influenced by the price of crude oil. As crude oil prices continue to rise, these companies could raise prices. However, when crude oil prices falls, it will bring down the entire sector, which indirectly affects the stock market. Unless there is a stabilization of crude oil prices, the stock market will be extremely volatile. Finally, we're talking about how I feel the stock market will react in October of 2021. Given the multiple reasons, most investors could point out to forecast a drop in the stock market. I feel the stock market will come down. However, given the damage done in September, I strongly feel there's a chance for a rebound in the stock market, as many investors do not believe that there will not be any good news to support the bulls in the short term. Any good news would push the stock market higher. In conclusion, I strongly feel the stock market will go down in October if there is no good news. Even though there might be good news, the stock market will recover slightly. However, the recovery will be short-lived. Until the three main reasons are being resolved, it is very hard for the stock market to rebound a strong recovery. This is my personal opinion. With that, thank you, have a nice day. Goodbye.